The worst that we've seen, since June overall. This has been some of the most painful sell-off that we've seen.
U.S. stocks have surged the most since June 2020. Stocks rose for the first time in 2 years on Wednesday as a steep fall in oil rates alleviated concerns that global inflation was likely to worsen.
Still have the ongoing conflict in Ukraine and the impact that that conflict is having on energy and agricultural commodity prices.
World equities launched a violent recovery from the war-induced meltdown, with European markets posting the largest comeback ever since the pandemic's bottom in March 2020, and U.S. stocks soaring the most overnight since November of that year. Oil fell by greater than 10%, while Treasury yields fell by more than 5%.
Which we're expecting to be pretty thick and fast, will do to the overall demand on the Treasury side as well.
Traders have been looking for any possibility to purchase the greater than 10% drop in U.S. equities since the beginning of the year. That opportunity comes on Wednesday. The S&P 500 index gained 2.6%, its highest gain since June 2020, thanks to advances in information technology and financials. Petroleum was the worst-producing S&P group, falling 3.2% as oil plunged nearly 11%. The shift comes despite a slew of issues that shook stocks previously this quarter, including the Ukraine crisis, increasing inflation, and a dramatic spike in Treasury rates prompted by the Fed's tightening economic strategy. The skyrocketing price of oil is leading to the greatest level of inflation in generations.
Oil market reacts much like the stock market. It gets very jittery when it comes to volatility.
Petroleum prices in the United States reached a new high on Monday, while diesel rates reached their highest level since 2008. Rising gas prices as a result of Russia's war on Ukraine remain to impede President Joe Biden's efforts to control inflation and ease customer hardship in the United States. The oil price will stay chronically turbulent, and crude rates will remain sustained until there is significant de-escalation in Ukraine's conflict, says Ed Moya, the senior industry analyst. Prices have been thrown for a loop over the last week as traders try to predict how much financial harm Russia's incursion of Ukraine would cause. With so much doubt surrounding the Ukraine conflict and its eventual economic ramifications, unpredictable fluctuations are expected to persist. The region is important to investors since it is a significant producer of oil, grain, and other goods, the prices of which have risen due to concerns about supply interruptions. Risk markets are high now, indicating investors are no longer in airplane mode and are beginning to consider value again, said Chris Lowe, senior economist. Subscribe to our channel for more updates.